Good morning, everybody. Thank you for joining us this morning and welcome to this morning's webinar hosted by corporate registry data specialist Kyckr. So thank you to Kyckr. I'm Mike Harris, an independent financial crime compliance specialist. And thank you for joining us on this Monday morning, or depending where you are in the world at this point. This morning, we're going to be looking at how to build a business case for investment in the digital transformation of KYC and AML. And importantly, what are the key success factors to make sure that it all goes to plan? Regulation, lack of bottom line benefit, legacy systems, and many other factors have all played a part in holding back investment in new AML systems. But that's beginning to change now as a variety of new pressures act on regulated firms to change. So we've got a number of questions to pose this morning on this topic, and to seek their guidance, we have a panel of specialists with us, and I'm delighted to welcome Ian Henderson and Patrycja Wisniewska. I apologize, Patrycja, if I didn't quite get the pronunciation right, but I'm sure you'll correct us in your introduction. And I'll ask them to introduce themselves in a moment. It's a big topic, and before we start, I just want to point out a couple of housekeeping points. If you do have any questions, there is a question and answer section, so please put them in there. We'll either take them at the end, and we'll make sure we leave some time for a Q&A session at the end, or we'll deal with them as we go along, and I'll ask the panel to keep an eye on the panel on the questions and comments section as we go along, and we'll pick up anything that you'd like to ask about as we go along, if that's appropriate. So before going any further, I'd like to ask both Patrycja and Ian to give a short introduction to themselves and what they do. So Patrycja, if I may start with you, and please correct my pronunciation of your surname, and tell us all about what you do.
Hello, my name is Patrycja Wisniewska. Actually, your pronunciation was pretty good, Michael. I'm the COO of Blacksmith KYC. I've spent the last 15 years working on a broad range of digital transformation projects, such as the mobile banking apps, mobile payments, platforms that were enabling digital banking services. And 4 years ago, I've joined Blacksmith KYC to bring new technologies to know your customer and anti-money laundering space. So thank you very much for having me here today.
Thank you for joining us, and I'll hand over to you, Ian, if I may.
Hi, hello everyone. My name is Ian Henderson. I'm Chief Executive of Kyckr. I've been Chief Executive here for the last 4.5 years. Prior to that, I had a 30-year career in banking, the first, I guess, 2/3 in two of the UK's biggest banks, and then latterly in the challenger bank space. But after 30 years, I chose to do something different. That different is, I guess, poacher turned gamekeeper in terms of providing information to support the banking sector, and that's what Kyckr does. In addition to that, I guess to stay current, I sit on the board of two of the smaller UK banks, so I'm getting to see this from both sides of the equation, both from a director of a bank with the obligations that the banks face, as well as a potential solution provider.
Great, thank you, Ian. As you can tell, between our two panelists, we have a lot of experience here, so hopefully we can really shed some light on this, what is, I think, a really important topic. But we put 4 questions in the synopsis for this, and we're going to try and address them all. We're going to ask ourselves, what does digital transformation look like in the AML space? Paint a picture of what that process looks like in some detail. Also importantly, what are some of the metrics that people can use to build the business case for change? Building a business case for change in AML is actually a big challenge. Unlike fraud, for example, where obvious bottom line benefits, anti-fraud solutions are much easier to justify. Bringing about change in the area of AML, where there's a preponderance of regulation, a lack of bottom line benefit for investment that's immediately obvious, and of course the fact that there are many legacy systems that inhibit change. So we've got a lot of factors to bring into play here. So I'm going to start by asking our panelists to discuss some of the pressures that are currently acting on firms to drive the change that we're beginning to see. Change is inevitable in any sphere, but we're now seeing that gather pace in the AML space. Why is that? What is it? And perhaps I can start by turning to you, Patrycja, based on your experience working with many clients.
Yeah, absolutely. Look, I think it all starts with the customer. Superior customer experience is good for business, and very often AML investigations are broken deals, result with some companies even de-risking. That means offboarding some customers because they just don't know how to assess the risk related to AML and due diligence. And you also see that some procedures create a lot of annoyance among clients and business partners, especially FIs and large banks are often asking for additional documents, declarations, statements. There is a lot of duplication in a process. This is all an irritator. So a lot of clients are looking actively for financial institution can then deliver better customer experience. And how they can deliver that, right? This is by having tools in place, by solutions that allow to gather data and use technology to create customer due diligence instead of relying solely on exchange of documents between clients.
Thank you, Patrycja. Ian, your take on this question.
So the starting point is, as Patrycja said, it's the customer. But I guess from an AML perspective, it's not all customers were created equal, and there's some bad actors out there who impersonate customers. So therefore, bringing it back to the AML angle and the regulatory pressure on financial organisations and regulated businesses to make sure they truly understand who they're dealing with is a primary driver. But trying to do it, as Patrycja said, in as frictionless a way as possible, because not everyone's a bad actor and not everyone needs to be tarred with the same brush. And I guess that's the challenge that regulated businesses face. How do you get a fit for purpose solution that doesn't antagonize either existing customers or potential new clients, and at the same time making sure that you identify those customers that you do not wish, or prospects that you do not wish to do business with. So for me, it's the regulatory pressure, which is constantly evolving, constantly changing, and especially for banks and payments companies and other regulated businesses that transcend national boundaries and have an international presence, then it becomes even more challenging.
Yeah, thanks, Ian. All good points. I just wondered what you both think about the fact that there are increasing pressures on compliance budgets. Costs are a big factor, and efficiency of systems is a big factor. Do you think that has a big impact on driving change? Patrycja, perhaps I can start with you.
Absolutely. Look, when we're talking about regulatory pressure, of course, we have here the fines, and the fines are increasing. I would look up some statistics. So there was this report of Deloitte, the Banking Risk Lab report, that summed up that last year financial institutions paid $5 billion in fines for inadequate anti-money laundering controls in place or processes in place. Is usually related to inadequate customer due diligence, not understanding the exposure companies have to high-risk countries or to sanctioned countries, and also some inadequate controls in place for transaction monitoring. So those are the fines. Of course, it's not only the value of the fine, but it's also the impact it has on the organizational reputation. There's also a risk of closing some branches and also management attention that is spent on those issues rather than building business. And I think another thing that we have here is, there's regulation coming in, there is increase in regulations, and companies can respond in multiple ways to that. And what we see very often is traditionally more people, more employees, more analysts will be added to the program. But you can also go different direction and just invest more in technology. And I think the latter is so much better because it gives you the scalability. The technology, especially modern technology, is built in a way that allows you to scale from 10 cases to 1,000 in a matter of days, which you cannot afford, which you cannot do with just hiring additional resources.
Yeah, thanks, Patrycja. I think those are very valid points. Ian, do you think there's anything with your banking experience that's held back investment in new technology in particular?
Well, I think there's a number of factors that have, and I think it's the complexity of the challenge. So building on Patricia's first point, the financial penalties that continue to be doled out. I think the nature of those penalties has changed over time. I think the first generation fines were typically for poor onboarding and poor customer records. I think what's happened now is it's moving more towards monitoring who's on your books, because it can change over time, and therefore I think banks then have to figure out, how do I keep up to date with my established client base? The business did this form of business X years ago, but it's evolved and morphed and changed over time. The directors have changed, the shareholders have changed. So how do you keep on top of that? And that's why you hear things like perpetual KYC and ongoing monitoring. So how do you build a business case around that? It becomes challenging. From wearing my banking director hat, then for me it's about competing claims for scarce resource. AML is just one aspect. AML risk is just one aspect of risk. You've got strategic risk, you've got technology risk, you've got cyber risk, you've got a whole bunch of other risk categories that are bidding for scarce change resource. You then got the core business, product development, marketing, sales, HR. Everyone's competing for scarce investment dollars. And again, building on Patricia's point, what price do you put on reputational risk? It's a difficult thing to pin a number on, whereas you can pin a more direct number, to adding to your sales force or product development or marketing spend. So it's a complex conundrum with competing and conflicting interests. And I guess that's what senior management's job is there to do, is to figure out where the stronger business cases lie. But if you've got the wrong customers, then I think that certainly adds to the case for increased spend on AML.
Yeah, absolutely. Thank you, Ian. That's really important points. And as a director sitting on the board of a bank, you will have seen the cases being put to you. So we'll draw on that experience as we go through what do boards look for as proposals are put towards them. I think that's an important topic, particularly for AML investment. So let's move on a little bit here. People talk a lot about digital transformation. Digital transformation has affected all our lives in a myriad of ways that we are all very familiar with. Perhaps the whole AML space has been a little late to that party, with some exceptions. But what does it actually look like in the AML space? What does digital transformation mean? Patricia, perhaps I can hand that one over to you to start us off.
Right. Very good observation, Michael. Look, I spent most of my career in digital transformation in a very fast-moving retail segment. So that was about mobile banking apps, where banks were very much competing with each other. So it was going fast. When we started working on a project back in the days at ING, we released our first mobile banking app within 3 months, and there was a huge demand from the customers. So big pool from customers to invest in those technologies. And somehow KYC, AML department stayed in the old ages, so very much focusing on manual work, collection of documents, analysis of documents. And for some reason, there's not enough push to transform those departments, which I think it's really a pity. But it's also an opportunity right now to really have like this technology leap, right? So to go immediately into highly scalable solution, maybe use cloud computing or modern technology like API to manage large data sets. So there's a huge opportunity that technology is so advanced right now that allows AML departments, KYC departments to just go immediately to a very good level of solutions.
Thank you. Ian, perhaps I can ask you your impression of this one.
Yeah. So I've been around the block a few times, so I've heard this concept called different things. Back in the 90s, it was business process re-engineering, and then it evolved into change. Now, change, I guess, wasn't ambitious enough, so it became transformation, and then transformation wasn't sexy enough, so it became digital transformation. So I think that's the kind of journey that we've been on. But ultimately, fundamentally, it's about the same thing. It's about doing things more efficiently, more effectively, and ultimately better. So for me, that's the the underlying rationale for doing this. And again, building on Patrycia's point, the traditional approach to this, because it was complicated, bad actors were smart, therefore it needed human brain power to tackle them, and that meant you threw people at it. I think we've now reached a stage, an inflection point, where we can certainly make the people challenge more straightforward in terms of using technology to do the most mainstream, manual, easier to do bits. And with the advances in AI, and even relatively simple things like optical character recognition can help facilitate some of that. And then that leaves the human brain power to focus on the more value additive aspects of the knowing your customer, knowing your business customer challenge. So for me, that's where the digital and transformation really do marry effectively, because we get the opportunity to use technology, but to use it effectively and not at the expense of human brain power.
Absolutely. A couple of things occur to me in what you've both said. One is or to ask you both, to what extent do you think that the regulator has been a brake on firms embracing new technology? Is there an effect that makes firms ultra cautious, if you like, in bringing about change to their systems because of the impact that it might have from a regulatory perspective?
Maybe I'll kick off, because obviously I'm seeing regulators on a regular basis, certainly the UK regulator on a regular basis, and in past lives, international regulators. So the first point to make would be that I think that there's zero scope for regulatory arbitrage. There's no regulators going to say, I'm going to make it easier for regulated businesses in my jurisdiction to facilitate money laundering. So clearly the benchmark is established and will only increase. And then as different jurisdictions set new, fresher demands in light of new information, then others will follow. So that's the first general point, to say that the regulators rightly take a key focus in this. And then you look at the global costs of money laundering, it's just such a massive number, and there's huge social pain as a consequence. Then the regulators are rightly actively engaged. So that's the first point. Second point is that they allow organizations a significant degree of freedom to find appropriate solutions for the particular requirements in order to ensure that they comply. And from some work that Kyckr has done in terms of looking at the ecosystem, the KYC, KYB, AML, fraud prevention ecosystem, there's getting on for 700 companies globally who are involved in different ways. And there's some are international, some are national. So there's lots of suppliers and potential suppliers out there to help. And no regulator will dictate in which direction you go. So I think the regulatory view, certainly out of the UK, is it sets a direction, it sets minimum benchmark levels, but it allows banks, payments companies and others lots of latitude to make sure that they comply in an appropriate manner for that organization, but with the sword of Damocles hanging over them, that if they fail, there are consequences. And then, as Patrycia's already highlighted, there are substantive penalties for those who fail.
Absolutely. Thank you, Ian. Patrycia, you're based in Singapore. Now, my limited knowledge of the MAS in Singapore is that they've been very supportive towards RegTech development. Would you like to just comment on the approach that you see in Singapore from the regulator towards the adoption of
Absolutely. MAS, so for all the other participants of the webinar, this is Monetary Authority Singapore, which is the regulator, local regulator here. Yes, MAS is very supportive of digitalization. And the reason for that is the auditability of the documents, having good audit trails with digital evidences, because this is something that you cannot really fake, right? If you have solutions that give you timestamp, that prove what the source of information is, what criteria are we used for risk assessment, this is really solid. This is really solid in the analysis, the AML KYC analysis, and this is also very solid for regulators to control how companies are implementing those policies in place. MIS is also a big sponsor of fintech and RegTech initiatives. They are supporting them either by coaching or creating space for doing business, also by some investments in some of those. So it's a great place, Singapore, to build a RegTech solution.
Great, thank you. Well, I think there's always best practice, sharing best practice, looking at what other regulatory authorities do is really helpful. And I think that would be, I'm jumping ahead, but a takeaway from me for the audience would be to have a look at some of the regulatory initiatives that are happening in other parts of the world, because we've got a lot to learn. I think a lot of people would accuse our own regulator, the FCA in the UK, of not giving sufficient guidance to firms in the adoption of new technology. But cost is a big factor in all of this, as you both touched on, and certainly you touched on the still the preponderance of a lot of labor-intensive processes being followed, needing to be updated, and that drives cost, and cost is a big factor in all of this. So let's move into the next area, because we're going to be talking about some of the metrics here. How do you build a business case in practice? You need measurables, you need things that you could attach numbers to justify any investment, notwithstanding AML and KYC, which has a regulatory driver behind it in the first place. But to bring about change, obviously you need some numbers, you need some metrics. So let's start by perhaps asking I don't know who would like to start and kick us off in this one, but how do you go about developing a set of metrics that help you build the business case, and what are the factors that you need to take into consideration? Who would like to go first and take that one?
Well, I'll go first, and I'm sure Patricia will add to it. So it's classic cost benefit analysis. Understand the costs initially. So the cost base that your current approach implies, and we've touched on it. The traditional approach has been people centric. So you can figure out the cost of your compliance department. You can figure out the numbers needed for your anticipated onboarding and ongoing monitoring obligations. So that's a starting point in terms of the cost. The benefit case is a bit more complicated, as we've touched on already, in terms of you can do the direct benefits in terms of bringing X customers on board. That customer is worth X. If we make it a painful process, we will see a fall off rate of Y, and therefore you can start to apply a cost of customer friction. You can also start to think more broadly, as I touched on earlier, in terms of how can you factor in other aspects of the cost benefit case to bring in additional factors. One of which is difficult to measure. We touched on it already, which is what price do you apply to reputational damage and the management time taken up, resolving the sins of the past. But equally, you can work with your sales team, you can work with your marketing team, and you can actually make your onboarding a point of differentiation. So we see that with the digital banks and the neobanks who do not do it the traditional way. They leverage technology, they use digital capability to verify, and without needing to go to and from the customer, because I guess the traditional branch-based model, certainly in the UK, it can take multiple weeks before a business account can be opened, whereas a digital bank can do it in a matter of hours with some elements of verification after the fact. So for me, it's about breaking down the CBA, the cost benefit analysis, breaking out the costs, breaking out the benefits, really trying hard for those that are more difficult to articulate, to put at least stabs at metrics for it. And I think with that, you'll have a pretty compelling business case. If you've only focused on stuff that's easy to measure, then clearly against other competing demands, you might struggle.
Thanks, Ian. Patricia?
Yeah, about benefits, great introduction, by the way. Look, I agree with everything you said, but what I wanted to highlight on benefits is this externality called employee experience, because what we see is, we already mentioned that very often the response to increased regulation and regulatory requirements is adding new people. But there is limits to that, right? It's difficult to attract talent. It's even more difficult to retain talent. And what I see in many organizations is that KYC analysts, they're usually like junior jobs, and that there is a huge turnover in those departments. So people stay as little as 6 months, sometimes they last a year, sometimes longer, but this is a very short period of time. So if you add those additional costs of recruiting, selection, and then training of those analysts, and then by the time they're trained, they're already gone because they find their work so boring. If we ask analysts, young people who are usually digital natives, to work with old systems that are very usable, that don't do the job at all, And on top of that, the work is heavy and stressful, and there's repetitive tasks. They are being asked. I saw some analysts being asked to copy paste information from screens from one screen to another. I mean, humans are not made to do that. So I think in the benefits, you should consider also this HR aspect of hiring and retaining good people and reducing the turnover in the KYC teams.
Yeah, I think you've touched on some really important points there, Patrycja. I mean, I see three tensions for all firms. One is the efficiency one, which is all about being more efficient and reducing cost and re-engineering processes. Automating them is a key way of doing that. But then what are the human consequences, and what happens to those jobs that have been taken out of a manual process, and how do we deal with that? Then you have the effectiveness issue, which is all about, are we actually effectively finding and detecting possible financial crime early on? How good are we at doing that? Do our systems help us to do that? And I think the effectiveness one is, all about how effective firms' risk-based approaches are in terms of, finding possible financial crime early on. And then, of course, as you touched on earlier on, it's the customer experience. So you have three areas here, in some ways creating a tension against each other. So we've got to marry those things. But let's go back to the human one, because obviously we're not saying necessarily that those jobs just disappear, but they transform into something else. Ian, I know you've spoken about this. Let's pick up on this a little bit, because, as you said, dull, boring jobs, repetitive processes lead to high staff turnover, and we don't want that.
Yeah, I guess there's two aspects to the high staff turnover. So that's definitely one in terms of the nature of the job, but equally it's a finite gene pool. And again, certainly in a European context, what we've seen over the last, I guess, decade or so is amongst the highest percentage year-on-year salary increments has been in the compliance space, because people recognize the fundamental importance of the role and of remaining regulatorily compliant, but at the same time trying to get the job content to be more effective. I'm not sure anyone would ever use the word fun, but certainly more enjoyable than doing the cutting and pasting that Patrycja referred to. So I guess for me, the challenge then is about how you, again, leverage technology, leverage smart working, leverage digital transformation in ways of changing, work processes, the building blocks that you focus on, and letting the human beings do the higher value add. So if you look at things like customer due diligence and enhanced due diligence, that's where the action is, for me, where the action is at, where you really get to peel back the client file, try to look what's under the bonnet, really understand what's going on. There's lots of different data sources that you can start to apply. So for me, that's where the challenge is, not in the very simple business that, you readily understand who the directors are, who the shareholders are, the nature of the business, where it's trading, what it's doing. I think machines can do that now. Yep. And therefore it's for the more complex structures. And certainly once you start to transcend national boundaries, a business might begin in the UK, then it's owned by a European-based holding company, which in turn is owned by US private equity, with the limited partners and general partner operating out of, one of the Caribbean islands. So again, that's where the real complexity comes in. And I think where there is genuinely value added focus for the staff working on those aspects of the job, but not for me the boring grunt work, which is copy paste. That please let the computer do that, and let the staff focus on the real value accretive activities.
Well, I think that absolutely, and I think there you bring us as a great segue into the whole practicalities of what digital transformation is all about, using and harnessing new technology. AI is a word bandied around far too much, probably. But Patrycja, you work in this area. Just tell us where the AI opportunities are for using tools like machine learning and natural language processing and other AI-based tools that you come across. Where are the opportunities in KYC and AML processes for adopting smart technology?
Well, I think I'll start by repeating what you just said, that a lot of solutions are called AI, but they're actually not AI. But nevertheless, in the recent years, the availability of solutions that can process large sets of data, large data sets, increase exponentially. And also you see that the cost of having solutions for data management is also reduced a lot, especially with the use of cloud computing or smart technologies like API connection that allows you to transfer large data sets in a matter of seconds. So I think companies can make a better use, a more frequent use of those technologies. So I think a very good example is here, Kyckr Blacksmith, right? We have Kyckr that is collecting data from trusted data sources. This data is highly reliable, right? It comes directly from trusted data sources via encrypted API. And it goes to Blacksmith, where we use analytics to basically read and understand this data. So we not only help the analyst to structure a good customer due diligence file with all the information that is necessary for the risk assessment, but we also use analytics to provide key insights. What kind of exposure do we have here? What kind of customer are we dealing with here? And this customer due diligence file is created in a matter of seconds. I think we have now performance between 10 and 20 seconds to get such a file up and running. This is, of course, something that we weren't able to do with technology that was available 10 years ago.
Yeah, thank you. You've touched on something there that we perhaps could pick up on a little bit more detail, which is the importance of data in the whole KYC and AML process. We talked quite a bit about technology and processes, but clearly none of these function without good quality data behind them. And that's obviously not just external data that's used, but also the quality of internal data. And often that's cited to me by firms as a problem area. Managing internal data is not easy, but it's essential if we're really going to see the benefits of digital transformation. Ian, any thoughts around the management of data for financial institutions?
Yeah, building on Patrycia's point about big data, and an obvious place for banks is transaction monitoring, where a real regulatory pressure to make sure that the bank understands what payments patterns are and anything that's out of line. So all of the transaction monitoring systems that are out there have one single Achilles heel, which is the number of false positives. It looks unusual based on what that client has done historically, but guess what? It's a legitimate transaction. And therefore, it's how one distills as effectively as possible. And I think that's where, next generation AI will probably come into its own in terms of actually figuring out, yes, it's an out-of-line transaction, but it's a legitimate transaction. And there is no need to either pause the payment, hold the payment, go back to the customer to find out what the payment was all about, all those customer friction points that we've touched on earlier. So for me, I think we now stand in the cusp of, potentially significantly enhancing the whole customer experience and, financial institution experience and staff experience by harnessing that technology in a way that I guess first generation hasn't, going back to my transaction monitoring false positives point.
Yeah, great. Thank you. So yes, I mean, it begs the question about AI, which has been such a topical subject in recent months, of course. Is AI going to take over the world? Is it going to take over financial crime compliance and AML compliance? Rhetorical question, really, but clearly, it's there are clearly benefits that are going to accrue and going to be harnessed and be useful in the AML compliance world as we go along. Not the least of which is the policies that we generate and ensuring that we have best practice policies in our businesses. And I'd like to move now into, if you like, draw on your respective experience of practical examples of digital transformation. The question that I've got is, what are some of the innovative real case examples of how best-in-class companies are utilizing technology and that you're seeing in your customers? And I guess I'll start with you, Patrycja, as you see a wide range of customers due to the nature of your business. What does good look like? What's best practice in this area?
Yeah, what is best practice is having a plan. Having a plan, because we see in large organizations lots of silos, Some silos are related to the customer type, right? Whether we're dealing with KYC or retail customers or small companies or corporates. There are silos related to the types of products, and you see a lot of duplication, a mix of legacy, new systems. And what I also see, you're talking about problems, not solutions, but talking about also the fact that a lot of solutions are not compatible. So what is good is opposite to that. So having a plan for your organization of how are you going to, what do you want to achieve, which aspects of this big space, KML, KYC and AML, which part of it you want to tackle. And there is screening, there is customer due diligence, there is customer life cycle, so case management or understanding where your customer is with the different reviews. There is risk scoring in that space, there is sanction, adverse media. So it's a very, very large space. So having a plan is key. And then once you have a plan, you have to enable data. Like you said, Michael, internal data, getting great grip on your data. What I see is legacy systems which usually have data scattered over different databases and legacy systems. So you have to create some sort of space and sort of data lake or a cloud solution internally that is very secured to enable processing of the internal data. And you have to add also external data to the mix, right? So you have to see what is it out there. So having the right mix of external data sources that provide reliable real-time information that cannot be altered by third party, in a sense that, you know, criminals cannot alter that. This is also very important. And I think the last one is looking at solutions. I think the success stories are related to organizations that chose modern solutions that offer interoperability. What it is, interoperability means that they connect to each other, that they are designed, the solutions that are designed in a way that can connect to different systems that are based on microservices, that use API architecture, maybe are hosted on a cloud. It can be also transferred to internal cloud. There are also some ideas like infrastructure as a code, right? So the solutions can be deployed internally in a speedy manner. So what is the advantage of that? First of all, it doesn't take 5 years to bring this digital transformation, but it takes a few months to be up and running. Second, it allows you to play around. You see, you buy a solution and it's not really working, then you can get rid of the solution within a year, and then you bring another solution that might be more better for your purposes. So this, connectivity, interoperability, and having solutions that like to partner with others in order to deliver value, this is key to success, in my opinion.
Great, thank you, Patrycja. Ian, your thoughts?
So for me, I guess it's about being smart ultimately, and by that I mean is thinking outside of the box. Just because it's been done this way for decades doesn't mean to say that that's the way you need to continue to do it. So think smart. Plagiarize. Look at best practice out there. Basically steal that best practice, but put your own individual wrinkle onto it. And I think for me that's how you can start to add significant value and add it quickly. Collaborate either with vendors, with partners, with like-minded organizations, but equally collaborate with your competitors, because AML is not necessarily a source of competitive advantage for organizations. So chief risk officers talk to each other, heads of financial crime talk to each other, money laundering reporting officers talk to each other. So again, use that composite knowledge base again to put your own wrinkle on it and build your solutions in that way. But for me, it's, as Patrycja says, ultimately all about leveraging the resources at your disposal, and the most significant is technology enhanced solutions.
Absolutely, and that leads me into what I was going to ask you both, which is if you look at the specific opportunities to digitally transform specific AML processes, and we think about spectrum from initial onboarding, KYC, risk assessment, through to AML sanctions, PEP screening, transaction monitoring, EDD, investigation. There's a wide range of spectrums, some of which have far more technologically advanced solutions than others, probably for good reasons. Where have you seen firms actually prioritizing the digitalization of those sorts of processes? And I'm thinking here, for example, I see a lot of KYC solutions which are built around onboarding of individuals and doing that much more, sort of smartly, driven in part by the fact that COVID forced us all to be remote working, and straight away, fundamentally, those processes had to change overnight from the in-person sort of approach that we've had traditionally. So what are firms looking at? What are they looking to automate, and where are the opportunities to make some wins across that spectrum of processes? Anyone? So it's a big question, but anyone like to have a stab at giving our audience some ideas in that area?
Well, if I kick off, and I touched on it earlier, I think we're seeing a morphing more towards ongoing monitoring and perpetual KYC. So I think that's going to be the next big area, where you've done the heavy lifting to onboard the client, but within 5 minutes that client record is potentially out of date, and therefore how do you keep it live? And I think this sort of time-based approach, if it's low risk, I'll review in 5 years. If it's medium risk, I'll review in 3 years. But if it's high risk, I'll review annually. I think those days are gone, because so much can change, even within the high risk area of annually, so much can change. And therefore, I think the next source of the leveraging of technology has to be in the world of, leveraging data, leveraging technology, and making sure you're staying on top of your clients. So for me, first gen was onboarding. I think that's, much more efficient than it was, 5-10 years ago. Next gen is going to be ongoing monitoring. And then tied into that, my earlier point around what are the big data sources for banks, it's around transactions. So therefore, next gen transaction monitoring, really leveraging AI to root out the false positives. For me, those are the two, main things that I see in the immediate horizon.
Yeah, and they would obviously have big benefits. Patrycja, sorry.
Yeah, absolutely. I really agree with you. So when I see that the best digital developed spaces is transaction monitoring. And the reason for that is because, a lot of transactions are digital already. Back in the days when SWIFT was established with digital network of transactions and messaging, it was a prerequisite for having some tools for large-scale transaction monitoring. So monitoring transactions and identifying different issues is well advanced. What is not that advanced is following up on that. So how do you identify whether there is an issue? How do you perform due diligence? How do you do investigation? This is an area that is still very heavy on manual work, on paperwork, and this is just not scalable, right? Because there are only more transactions, right? So also more hits, and often they're just not correct, or there is no capacity in the team to process that. So to me, the area that will develop most in the coming years will be definitely customer due diligence and investigation, which will lead to perpetual KYC, because now we're going right from manual work to more digitized work using large data analytics, but it has to become perpetual. You cannot leave files until you get an alert, or you're up to your next scheduled CDD review after 3 years or 5 years. There's so many things can check in. So perpetual KYC, customer due diligence, and I think also what we're doing with Blacksmith, digital policy management, because you need some sort of digital policy that can be easily adapted to regulatory changes to steer the requirements in perpetual KYC. So that's one cannot live without another.
Absolutely. Thank you both. I'd just like to sort of ask you, because obviously Blacksmith, Kyckr have a partnership, work together. And sort of the more general point from that is the importance of strategic partnerships in this space. If I'm a bank, if I'm a financial institution looking out into the community of solution providers, it's a bewildering spectrum. And I think you've touched on this already, Ian. And the creation of partnerships seems to me to be an important development in this whole space. Rather than as a bank or financial institution, I've got to work with multiple point solution providers. Do you think this is something that's going to develop even further as we go on? Ian, can I ask you for your thoughts on strategic partnerships?
Yeah, no, I think it's fundamental, and in the fact that there are so many of them. Blacksmith and Kyckr just being the recent number that we're involved in, and obviously Blacksmith have a number of other relationships that they're evolving. So yes, is the first point. Second point is that I think there are too many participants out there, so I think there will be some consolidation, and therefore I think the consolidation will be driven around those strategic partnerships. So that's a second trend that I see. And then ultimately, certain organizations want to build their, end customers, so banks, legal firms, payments companies, etc., want to build on their own platforms, and therefore, a fully integrated solution might not be for them, and therefore them, selectively and judiciously picking partners to work with that help fill the gaps and plug into their systems. Patrycia's earlier plug and play point, I think, are pretty important, and therefore it's the power of two, I guess. One and one adding up to a number more than two, is what drives the partnership angles.
Yeah, absolutely. Patrycja, your thoughts around this?
Yeah, I couldn't agree more, actually. You see, it's there are lots of initiatives, KYC initiatives, lots of solutions that were created in the last year. So definitely we're talking here about red ocean ready for consolidation and partnerships. So I think there will be lots of mergers and acquisitions in that space, or really good partnerships. And I think some of the players will also exit this space because of lack of interest in customers. Said this, the scale of a problem is so huge. It's just there's so many companies that need to digitize, that have to change, and the budgets, the KYC budgets, are so huge. That just the market size is very big, and lots of opportunities there.
There are certainly a large number of solution providers, an ever-increasing number. I think there's a couple of factors from my perspective. I often hear comments made, for example, that solution providers can overpromise and underdeliver, and I think that's an industry issue that has to be thought about. And if you are a financial institution onboarding a new solution provider, you want to be sure that company, that organization, is going to be around in the next few years. So resilience is a big issue. And I think as a community of solution providers, perhaps more needs to be done to support the regulated industries that are buying these solutions. So not really turning that into a question, but let's turn it into our final question, which is all about how we can ensure that implementation and execution of digital transformation is a success. What do firms need to do to make sure that their program, their plan, as you talked about, Patrycja, is successful? Who'd like to kick that one off? I'll ask Patrycja in that case.
Yeah, sure. Yeah, so we're always talking about this plan, and I think we can round it to go back to our title, right? Having good cost benefit analysis, really understanding why is the organization doing that, really understanding the cost, right? So the direct cost of software license and what it takes to implement it, what are the prerequisites, what is the hosting costs and the integration costs of the different solutions, and also really understanding these benefits. So not only the benefits of FTE reduction and increase in the throughput time of the investigations, but also looking at increasing the quality of the AML investigations, increasing the quality, the increase in the risk management practices, the employee satisfaction, the mitigation of risk. So really this holistic approach to understanding why this digital transformation is important. Because first, understanding why we're doing this is the first key to success. And I think another one is just splitting the elephant, how do you eat an elephant, right, in small pieces. I think just not designing those huge programs that will run over a year and start delivering value only in year 3, 4, and forward, but looking for solutions that are so modern that can be deployed fast and can deliver benefits on a shorter term.
Thanks, Patricia. Ian?
I think Patricia's stolen most of my lines, actually, but you know, so,
sorry.
Yeah, some other things to think about. So collaboration is one of them. So, you know, collaborating with partners, actually collaborating with your end clients and prospects, and work with them, really understand what their problem statements are, and help, you know, work with them to solutionize around their requirements. You know, work with your peers where it's it's not a source of competitive advantage would be another angle to look at. I think we've touched on it a few times. It's effectiveness. It's always circling back to making sure that what you're doing is what you thought about, and that goes back to Patricia's point. But don't swallow the elephant. Don't create this huge, massive 3, 4, 5 year program, because guess what? The regulation will have changed. Your clients will have changed. That your key engagement people will have changed. I think you've got to do it in bite-sized chunks and continually iterate. There's also a danger to say that I've set out on this route and therefore I'm not going to deviate because this is the route. And I think you need to, again, pause for breath periodically and make sure that what's being built, and I guess in an increasingly agile manner, you know, the move away from waterfall techniques to agile techniques, I think is quite important. But is this constantly pausing and making sure that you're happy with what's being built and iterate where necessary. But ultimately, I think it's about bringing your people with you. This will remain a people business, even though technology will become much more a factor, even though it will be technology enabled, digitally transformed, etc. People will remain at the heart of this because it takes people to beat the bad actors, and therefore keeping that people-centric engagement model in place, I think, is pivotal.
A good point to actually, and I wanted to ask you both about this. One of the things that I think, you know, needs to be thought about in any KYC, AML digital transformation process is the range of skills that you need to bring to bear on the plan if you're going to execute it successfully. And you know, what are we recommending, advising to firms to consider here? Because it's not just about the compliance team. There's a range of skills across the business that are going to be needed to deliver success. What are your thoughts in that respect?
Well, if I kick off, I would say your starting point has got to be people who know and understand the space.
Yeah.
But equally, your key resource are people who don't know and understand the space, because they come with a blank sheet of paper, fresh perspectives, different forms of thinking. So for me, it's a marriage between different skill sets and different experiential sets. And then hopefully that's where you get the 1 and 1 adding up to a number greater than 2 by having others spark off each other. I think it would be a mistake to let, you know, dyed-in-the-wool compliance professionals run it soup to nuts. That's not meant to be, you know, a derogatory statement towards those folks, but they've got a hugely important role to play. But I think the addition of a fresh and different perspective is, from my perspective, has got to be pivotal to future success.
Absolutely. Patricia? What
skills
do you see needing to be brought to bear?
Excuse me?
I was asking you what skills you think are needed to make a digital transformation a success over and above compliance.
Yeah, and I think, you know, you don't have to be too technical to actually understand what is needed in your team. I think having this curiosity, and not just like thinking, okay, that is how we were always working. That's where I was working for the last 20 years. We're not going to change. So this, you know, curiosity about what is it on the market, what are other players doing, what are your competitors and partners doing. So just, you know, looking out, understanding, and you know, having this growth mindset, always thinking, how can I make my processes, people, and technology better in the organization. And when thinking about the future, not only thinking in a scale, okay, we're now going to deploy one solution which will be the new truth for the next 10 years, but rather think, okay, times are changing, the technological development is progressing faster, so you have to think into, how am I going to do a solution that will be perfect for the next 2 years, but then can be easily replaced by something new, so that you build this flexibility in your planning. So yeah, curiosity, flexibility, growth mindset.
a good list. Thank you, Patricia. For our audience, if there are any questions, just pop them in. Panel, I think you can probably see the questions here. We've got something about the regulator in the UK. We kind of touched on that, but one of the initiatives perhaps we can just speak about, because it's not unique to the UK, is the whole idea of tech sprints to develop new solutions, which have been supported by regulatory authorities around the world, in fact. And I see a trend in that as something that can innovate and bring support to, particularly not just for new firms, but existing well-established firms to innovate and solve problems. Is this something that we can build on and we can capitalize on? Can the regulator help us to support, innovation through these kind of activities? I don't know if you see that in your part of the world in Singapore with the
ML. Yeah, and as I said earlier, I have good experience working with regulators, and I see this change in the recent years of regulator thinking along how to help companies change, right? Because we're on the same boat. The regulators, the RegTech solutions such as ours, the banks, other financial institutions. I mean, we all want to contribute in fighting financial and economic crime, but sometimes it's just difficult, because the regulation can be difficult, and you have to change processes, and also criminals. They're not standing still. They keep on inventing on the go. So, I think just having this collaborative approach to fighting financial economic crime, going into discussions with regulators and seeing them not as those that issue fines, but rather those that also have very smart people on board and help set direction and clarify what we can do together in order to increase the maturity of AML.
Great, thanks, Patricia. Ian, you can see this question. There's a sort of UK angle to this, and you see the regulator. I've seen the regulator regularly. Anything you'd like to add to this point about what does the UK regulator expect in controls of automation?
Yeah, so I think the regulator is uniquely positioned to Patricia's point. They see under the bonnet of all of the organisations they work with. Now, clearly, they can't betray, confidential secrets, etc. But they can start to see some themes. They can start to see some best practices. They are smart, per Patricia's point. So I think they can certainly help set direction. But certainly, they'll set minimum standards, but they'll never tell an organisation how to go about doing things. What level of automation is acceptable? What level of automation is not acceptable? And then we see it, we see the extremes in the UK, certainly, where you've got, digital banks where there's essentially no real manual engagement from first point of contact, and a few minutes later you've got your account open, and then your card is in the post, through to the older world approach of visiting a branch and rocking up with your utility bill and your passport, etc. So all of these things are part of the process, but there's no question that that older approach is going to progressively disappear like dinosaurs. But I think they will set direction. I don't think they will set minimum standards, and I don't think that they will oblige organisations to do things. But they will make sure and keep close to what you're doing.
Great, thank you, Ian. Well, we're coming up to our time. I'd like to conclude by asking both our panelists just for a few key takeaways that they can offer in terms of advice to our audience who are embarking perhaps for the first time on this journey, or what they should be thinking about. So, Patricia, perhaps you'd like to open and just give your parting concluding thoughts of takeaways.
Yeah, sure. I think the first takeaway would be about being smart about your digital transformation. So bringing in solutions that deliver benefits fast, because this will allow you to create engagement and book successes faster, and then you start booking the benefits while you're continuing your digital transformation journey. So plug and play solutions, ready to use solutions that prove their value in other organizations. This is the area that you want to explore. And I think a second takeaway is about using the files quality as one of your objectives of digital transformation. and also one of the benefits of the business case, because when you focus on the quality on the files, this has several consequences. One, you look for solutions that are highly advanced, that allow to pull high quality data, process that correctly, and give you a very good start of the AML investigation. Secondly, good quality files means that you give good tools towards the analyst. So it also has this side effect or of having a solution that is liked by the analysts, where they can focus their energy not on repetitive manual work, but rather something that humans are good at, which is intelligent investigations and looking for red flags within all this data.
Thank you, Patricia. Ian, the final word goes to you.
Two things for me. The first is, don't think about digital transformation or any form of transformation exclusively around efficiency. Clearly, it's a fundamental driver for it, but it's been touched on a number of times now. For me, the more important E word is effectiveness, making sure it is effectively driving the changes that you wish to see in your organizations. And that ultimately has to be better customer experience, better staff experience, and then ultimately better organizational experience, and therefore, all stakeholders gain. So that'd be point number one. And then tied into that effectiveness point, collaborate. Collaborate right, left, and centre to make sure that you get the optimal solution. So collaborate with your internal peers, the people in the sales line, in the marketing line, in the product development line, as you build this out. Collaborate with strategic partners, and equally collaborate with your peers. So for me, it's the E word, effectiveness, and the C word, collaboration.
Thank you, Ian. Thank you, Patricia. Thank you both. And we are up on our time, and I want to thank our audience for joining us this morning, and to let you know that a copy of the recording will be sent to all the participants this morning. So thank you, everybody, and have a good day, and goodbye.
Thank you.